I think the point made in the reporting is they're offering a discount so soon after launching the latest generation of handset. What's your read on it?
So I think they do offer this in China every once in a while. I think they really want to get jumpstart the Chinese market, which has so far been plagued by a number of things over the last few months with COVID restrictions and then opening some of that up. And China is an important part for Apple. 20% of its revenues comes from China. So I think if they're trying to jumpstart some demand in that area. Last week on earnings, they said that they were looking at improved foot traffic back in December. So maybe it's just trying to keep the momentum up at this point.
Well, I want to jump on that. So Tim Cook on the call said two things. One, they would have seen growth in the first quarter for handsets had it not been for supply chain constraints. And two, as you point out, that they did see improved demand once China's reopening really got underway. Do you take Tim Cook at face value on that?
Oh, I think so. I mean, see, you have to remember, last year, the smartphone shipments really were bad in China. But Apple didn't do as bad as the rest of the vendors. Remember, Apple is a very high-priced product. I think it is a lot less susceptible to big consumer shifts. But nevertheless, it is susceptible. Now, as far as China is concerned, we think whenever the reopening happens in a big, broader way, the Chinese consumer will go out and buy Apple products at that time. So we think if it's not in the first half, we think second half is going to be very strong for Apple.
Your company outlook on the Bloomberg terminal talks about the broader Apple ecosystem as being a good platform for growth. What is your outlook for 23 and beyond, and what drives it?
Yeah, so as far as the product growth is concerned, we are coming to a point when Apple is not going to grow in double digits in our view. It has grown 12% revenue in the last 5 years. We think the view, in our view, is over the next 3 years, think about a 6 to 8% revenue growth rate, coupled with that a little bit of margin expansion and then buybacks. I think that's the Apple financial model for the next 3 years. And I'm not so sure how many, investors out there are ready to, admit that's going to be the case for Apple.
In our last segment, Anurag, we were talking about the US-China relationship and geopolitics. You also note geopolitical issues as a headwind potentially to Apple going forward. What is your concern there?
I think the biggest concern is that almost, most of their products are assembled in China. And we have seen some diversification over the last couple of years. But I think it's going to take at least a decade for us to see any meaningful diversification. Now, luckily for Apple, they have done well to, skirt this issue all the way back from the tariff wars a few years ago with China to the most recent, big issues about semiconductors.
Right.
But having said that, I think they are not immune to any of these events, frankly.
Hey, Anurag, really quick. Are you excited about Apple's AR/VR headset?
So I think that, from our side, I think I want to see an application that can be used on the phone. The headset itself is going to be very good in terms of publicity and how it can showcase the cool stuff Apple can do. But financially, it's not going to have that big of an impact because these things don't move the needle given how dependent Apple is on the iPhone.
Right.
I do want to see what kind of apps, come for the iPhone for more of the augmented reality stuff, because that's where the ecosystem is very large.